House of Representatives meetings in a limited enclosed space, such as a committee hearing room, for greater than 15 minutes. Face coverings are required. Accordingly, the chair will treat wearing masks as a matter of order and decorum, and all members should wear masks. The chair has a strong preference for members to continue to wear masks, even while recognized. Members who do not wish to wear masks may participate virtually through the WebEx platform. Before proceeding to the hearing, I have one committee business matter. Without objection, two resolutions distributed in advance to all members' offices establishing committee task forces for the remainder of 2020 are approved. This hearing is entitled Oversight of Department of the Treasury Departments and Federal Reserve's Pandemic Response. This hearing is the committee's first quarterly hearing required by the CARES Act for oversight of the various facilities and programs under the Act. I would like to inform members that our witnesses have a hard stop today at 2 o'clock. I now recognize myself for 4 minutes to give an opening statement. Secretary Mnuchin, Chair Powell, welcome back. The pandemic continues to have a terrible impact. More than 126,000 people have lost their lives in the United States, and this past Sunday, there were 40,000 new cases of COVID-19, the highest number of daily cases. And so the unemployment rate in May was 13.3%, nearly 4 times higher than it was last May. All of the job gains of the past decade have been wiped out. Communities of color have been affected disproportionately, both by the virus and its economic impacts. The Centers for Disease Control reports that as of June, Black and Latinx Americans are 4 to 5 times more likely than whites to be hospitalized for COVID-19. And half of all Black adults are not working. During the 2008 foreclosure crisis, we saw a similarly disproportionate impact on communities of color. This was followed by an unequal recovery, where white households gained the wealth they lost. Black and brown households are still trying to catch up. We cannot endure another unequal crisis or unequal recovery. Your agencies and Congress must do all that we can to ensure that history does not repeat itself. So, I want to thank both of you for your efforts thus far and for the ways that you have worked with me and my members of this committee, including taking my many calls to strengthen the implementation of the CARES Act. Secretary Mnuchin, you have used your authority to provide community development financial institutions, that is, our CDFIs, and minority depository institutions, our MDIs, greater access to the Paycheck Protection Program, including by setting aside $10 billion for them to lend to ensure more loans go to small minority-owned businesses. Chairman Powell, you have worked with us to reduce the minimum loan size at the Main Street lending facility from $1 million to $250,000 and to extend the length of the loans. You've also broadened the eligibility of the municipal liquidity facility to increase access to a greater number of cities and towns. The CARES Act has provided important relief to struggling families and communities. But as the pandemic has strengthened, so must our efforts. And so, with that, I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes.
Well, thank you. Thank you all for being before the committee and behind these salad guards that we've arranged for you. Good to see your smiling faces behind your masks. But I'm grateful that we're able to assemble. This is certainly a large undertaking for the second largest committee in Congress. And I do want to commend Chairwoman for those efforts so that we can actually have this hybrid hearing. I think it shows that Congress and our government are still working, even if we have to do so using technology. Thank you all for your response and your active response since this crisis began. So I want to say, first of all, I believe the Fed and Treasury's decisive actions prevented the worst of the economic catastrophe. But there's still much work to be done. It's important to remember this is not a crisis that was caused by irresponsible choices by any specific industry or corporation. what we've seen is the impact of a voluntary shutdown of our economy and an effort to save lives. The Bipartisan CARES Act directed both the Treasury Department and the Federal Reserve to stand up responsible programs that would have been unthinkable even months ago, and to do so quickly, and you have done so rather quickly. Now that many of these programs are up and running, we must be forward-thinking to seek solutions to return us to the roaring economy that we experienced right before the global health crisis. That means we need to understand the nature of what we've done and what we need to do going forward. We know the pandemic has touched nearly every aspect of our economy and every family. Facilities discussed today need to be similarly far-reaching and responsive to economic conditions, not political ones. And I know there are a number of programs that have been desired by policymakers to be company-specific or something like that. That's not the appropriate response nor commensurate with the law. Moreover, members are going to have a lot of questions about fiscal policy, which I think Secretary Mnuchin is best fitted to, and monetary policy, which Chairman Powell is best suited to. And I think the understanding of that is important for us as policymakers to experience at the beginning of this hearing, rather than to hear you defer to one another. Our role in Congress is to assess the effectiveness of existing programs, determine the goals for additional relief programs, and identify the appropriate entity to provide that relief. That's our role. Of course, we need to access to key programmatic data. And so I want to commend Secretary Mnuchin for coming forward with the type of oversight material in a massive, unprecedented way, with the type of loan level data that we requested in Congress, and to provide that in a transparent way. The thousands of pages of documents that you and your team have assembled for just this committee alone is staggering in such a short period of time. So I hope my colleagues will use this data appropriately so that we can assess these programs and make sure they're working. And so I do want to commend you, Secretary Mnuchin, for the delivery.
Is African American. The four Anglo persons on this panel refuse to raise their hands. These are the problems that we have to contend with. I yield back the balance of my time.
Thank you, Mr. Green. I now recognize the subcommittee's ranking member, Mr. Barr, for 1 minute.
Madam Chairwoman, before I deliver my opening statement, I rise to a question of personal privilege.
Personal privilege.
Yes.
You requested.
I didn't hear. Without objection, certainly.
Thank you, Madam Chairwoman. As you know, 2 weeks ago, I lost my wife unexpectedly to a heart condition, and I want to express my sincere appreciation to you, Madam Chairwoman, Ranking Member McHenry, and to all of my colleagues on this committee on both sides of the aisle for the outpouring of prayers and expressions of sympathy for Carol and her greatest legacy, our two daughters. Your friendship and kindness during this difficult time for me and my family means so much, and I thank all of you.
Thank you very much, Mr. Barr. And now you may take 1 minute, if you'd like,
Thank you.
on the subject that's before us today.
Thank you. And thank you, Secretary Mnuchin and Chairman Powell, for appearing before the committee today and for your continued efforts to ameliorate the effects of the government-imposed shutdown of the economy arising out of the pandemic. Congress acted decisively through the passage of the CARES Act and other legislation to mitigate the damage to the economy, keep people employed and businesses strong to ensure that the economy can emerge on the other side in a position for long-term growth. Congress directed the Fed and Treasury to play a critical role in the response, and throughout the process, you both have been decisive and aggressive in using the tools at your disposal and have been incredibly responsive to congressional concerns. You've made appropriate adjustments, including several.
You're muted and they can't see you right now.
Each of you personally, and there are elements of Treasury's and the Fed's responses to the pandemic that could still be improved or adjusted to honor congressional intent. I look forward to talking to you about those today, including and especially in commercial real estate. Look forward to discussing that today. And again, thank you, both of you, for being here today. I yield back.
Thank you, Mr. Barr. I want to welcome today's witnesses. First, we have Stephen T. Mnuchin, Secretary of the Treasury. He has served in this current position since 2017. Mr. Mnuchin has testified before the committee on previous occasions, and I believe he does not need any further introduction. Next, we have Jerome Powell, Chair of the Federal Reserve Bank System. Mr. Powell has served on the Board of Governors since 2012 and its chair since 2017. Mr. Powell has testified before the committee, and I believe he does not need any further introduction. So without objection, your written statements will be made part of the record. Each of you will have 5 minutes to summarize your testimony. When you have 1 minute remaining, a yellow light will appear. At that time, I would ask you to wrap up your testimony so we can be respectful of the committee members' time. Secretary Mnuchin, you are now recognized for 5 minutes to present your oral testimony.
Thank you very much. And Mr. Barr, let me express my condolences for your loss. Chairwoman Waters, Ranking Member McHenry, and members of the committee, I'm pleased to join you today to discuss how the Treasury Department and the Federal Reserve are working together to provide liquidity to the credit markets, business, households, as well as state and municipal governments. We remain committed to making sure that every American gets back to work as quickly as possible. America's economy continues to recover from the challenges posed by the COVID-19 pandemic. The jobs report for the month of May vastly exceeded expectations with a record gain of 2.5 million jobs after experts had predicted nearly 8 million loss. While the unemployment rate is still historically high, we are seeing additional signs that conditions will improve significantly in the third and fourth quarters of this year. The Blue Chip report is forecasting our GDP will grow by 17% annualized in the third quarter and by 9% in the fourth quarter. The U.S. Chamber of Commerce reported this month that 79% of small businesses are at least partially open, and half of the remaining businesses are opening very soon. Retail sales rose in May by 18%, more than double the expectation. Investors in business have historically high cash positions, the highest level since 1992, indicating that private capital is ready to return as communities reopen. We are in a strong position to recover because the administration, working with Congress on a bipartisan basis to pass legislation and provide liquidity to markets in record time. In particular, the PPP is keeping tens of millions of employees connected to their jobs. Economic impact payments are also helping millions of families and workers through these challenging months. We are monitoring economic conditions closely. Certain industries, such as construction, are recovering quickly, while others, such as retail and travel, are facing longer impacts and may require additional relief. We look forward to continued conversations with you to address these critical economic issues. Treasury has been hard at work implementing CARES Act's program. The PPP, we've approved over 4.8 million small business loans for $519 billion. Economic impact payments, we distributed nearly 160 million payments in record time. Programs to support aviation and other eligible business, we have approved and dispersed over 27 billion to over 500 airlines and other aviation business, preserving hundreds of thousands of jobs. We're in the process of documenting loans to business and critical national security for approximately 25 billion. The Coronavirus Relief Fund, from this fund, we've distributed $150 billion across states and local governments, nearly half of all in additional money to tribal governments. The CARES Act also granted Treasury the authority to provide $454 billion to support Federal Reserve lending facilities under Section 13.3. Since March 17th, using funds available, I have approved a number of Federal Reserve programs. The Commercial Paper Program, the Primary Dealer Program, the Money Market Mutual Program, the TALF, the Primary Market Corporate Credit Facility, the Secondary Facility, the Main Street Facility, the Municipal Facility, and the PPP Lending Facility. We have committed approximately $200 billion, and to support these, the announcements of these programs have helped unlock markets and promote much-needed access to liquidity. We have over $250 billion remaining to create or expand programs as needed. While we're beginning to have conversations about supplemental relief legislation, we look forward to working with Congress on a bipartisan basis in July on any other further legislation that will be necessary. Treasury has already been entrusted with a tremendous amount of funding to inject into the economy. We are closely monitoring these results and seeing conditions approved. We would anticipate that any additional relief would be targeted to certain industries that have been especially hard hit by the pandemic, with a focus on jobs and putting all Americans back to work who have lost their jobs through no fault of their own. The Treasury Department is implementing the CARES Act with transparency and accountability. We are providing information to the government-wide reporting on USA spending and updates to Congress. We're also cooperating with the Congressional Oversight Committee, GAO, and others. We are pleased that the Federal Reserve has announced plans to boost loan information on its website regarding its facilities. Chair Powell and I have had very productive initial meetings with 4 members of the Oversight Committee, and we look forward to continuing to work with them. Thank you very much.
Thank you. Chair Powell, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and other members of the committee, thank you for the opportunity to testify today to discuss the extraordinary challenges our nation is facing and the steps we're taking to address them. We meet as the pandemic continues to cause tremendous hardship, taking lives and livelihoods both at home and around the world. This is a global public health crisis, and we remain grateful to our healthcare professionals for delivering the most important response and to our essential workers who help us meet our daily needs. These dedicated people put themselves at risk day after day in service to others and to our country. Beginning in March, the virus and the forceful measures taken to control its spread induced a sharp decline in economic activity and a surge in job losses. As the economy reopens, incoming data are beginning to reflect a resumption of economic activity. Many businesses are opening their doors, hiring is picking up, and spending is increasing. The economy has entered an important new phase and done so sooner than expected. While this bounce back in economic activity is welcome, it also presents new challenges, notably the need to keep the virus in check. While recent economic data offers some positive signs, we're keeping in mind that more than 20 million Americans have lost their jobs and that the pain has not been evenly spread. The rise in joblessness has been especially severe for lower wage workers, for women, and for African Americans and Hispanics. This reversal of economic fortune has caused a level of pain that's hard to capture in words as lives are upended amid great uncertainty about the future. The path forward for the economy remains extraordinarily uncertain and will depend in large part on our success in containing the virus. A full recovery is unlikely to occur until people are confident that it's safe to engage in a broad range of activities. The path forward will also depend on policy actions taken at all levels of government to provide relief and support the recovery for as long as needed. The Federal Reserve is strongly committed to using our tools to do whatever we can for as long as it takes to provide some relief and stability to ensure that the recovery will be as strong as possible and to limit lasting damage to the economy. After lowering the federal funds rate to essentially zero, our actions so far fall into four categories: stabilizing Treasury and agency MBS markets, money market and liquidity and funding measures, direct efforts to support the flow of credit in the economy, and targeted regulatory measures to support those efforts. So far, we've created 11 facilities under Section 13.3 of the Federal Reserve Act to support liquidity, funding, and the flow of credit to households and businesses and state and local governments. Without access to credit, families could be forced to cut back on necessities or even lose their homes. Businesses could be forced to downsize or close, resulting in further losses of jobs and incomes and worsening the downturn. Our emergency lending facilities have all been undertaken with the approval of the Treasury Secretary, and many are supported by funding from the CARES Act. Their status and effects are discussed in greater length in my written statement, which I've provided to the committee. The Fed will continue to use these powers forcefully, proactively, and aggressively until we're confident that the nation is solidly on the road to recovery. When the time comes, after the crisis is past, we will put these emergency tools back in the toolbox. I would stress that these are lending powers, not spending powers. I will also note that we design our facilities to work for broad ranges of businesses and municipalities. We do not target particular firms or industries. Elected officials have the power to tax and spend and to make decisions about where to direct such targeted relief. The CARES Act and other legislation provide direct help to people, businesses, and communities. This direct support is making a critical difference, not just in helping families and businesses in a time of need, but also in limiting long-lasting damage to our economy. Public faith in our operations depends on transparency. At the Fed, we're committed to that transparency, particularly in deploying our emergency powers. Thank you. I'll look forward to our questions.
Thank you very much, Chairman Powell. I now recognize myself for 5 minutes for questions. As I mentioned in my opening, the pandemic is strengthening, and so, too, must our response. 2 weeks ago, Chair Powell, when I asked you about the need for more congressional action to protect our communities, you said, and I quote, "There are something like 25 million people who are still dislodged from their job in full or in part due to the pandemic. I would think it would be a concern if Congress were to pull back from the support that it's providing too quickly," end quote. Unfortunately, tomorrow this is exactly what will happen if the Senate does not pass the HEROES Act. Tomorrow the PPP program stops taking new loan applications. The PPP should be extended immediately so that the remaining $135 billion in funding can support small businesses. Also happening tomorrow, millions of families will be unable to pay their rent and mortgages. In June, 1/3 of renters couldn't pay rent. 4.2 million homeowners are currently in forbearance because they're unable to pay their mortgages, and evictions have already started in many states where local eviction moratoria have expired. While the moratoria should be extended, it is not conscionable to simply delay an eviction and foreclosure crisis. Congress and the administration must provide support to struggling low-income families to cover their rent and utility payments. So, Chairman Powell, millions of families are at risk of being stripped of their home. Do you think Congress should provide financial assistance to ensure people stay in their homes?
Thank you, Madam Chairwoman. So I try to keep my fiscal comments at a very high level, and that comment you referred to was referring to the unemployment insurance that expires at the end of July. And I think for the specifics of what you need to be doing, I think we have the Treasury Secretary here, and I would defer to the Treasury Secretary on fiscal matters here.
Okay, so you put it off on Mr. Mnuchin. So while you have made some changes to broaden the municipal liquidity facility, many jurisdictions like the territories are still locked out. When we last spoke, you mentioned that it was difficult, but perhaps there was a way that Guam may be eligible. Did you find a way to take a serious look at that and determine whether or not something could happen?
Yes, we are taking a serious look at that. So the territories themselves are not investment grade rated, and they weren't before the pandemic set in, and that's the minimum standard for access to the municipal liquidity facility. Of course, businesses in the territories would be eligible for the Main Street facility. Some of the revenue-based facilities that that Guam has are investment grade rated, but below the minimum, and we're actually reviewing our credit standards in the municipal liquidity facility at the moment to determine if there's a way to adjust the facility in a way that would make eligible some creditworthy issuers without sort of violating the spirit or letter of Section 13.3.
Thank you. Secretary Mnuchin, with critical unemployment support expiring next month and today marking the last day that Treasury and SBA claim that new PPP loans can be approved, does the administration support extending these programs as proposed in the HEROES Act?
Well, we do support additional legislation, and we look forward to working with the House and the Senate on that. As it relates to the PPP, I've already had conversations with the SBA committee and the Senate about repurposing that $135 billion and think that should be done, and look forward to working with both the House and the Senate so that we can pass legislation by the end of July.
Thank you very much. I now yield to
Maybe not.
No. The gentleman from North Carolina, Mr. McHenry, is now recognized for 5 minutes.
Well, thank you. Thank you for your testimony. Secretary Mnuchin, I think there's wide agreement that your engagement in the PPP program made things largely better, right? The Treasury expertise in making sure that SBA could deliver on this really seminal program of the CARES Act. It's proven out because you got 4.5 million small businesses that have benefited from it. The average loan size is quite modest in the context for our economy, but the effect is pretty wide scale. So what would you say regarding the additional funds that are purposed for PPP? What should be our focus as policymakers on repurposing that $134 billion? How can we best do that? Is it the 7A program? Is that expedited loan programs? How do you see this fitting in, given the actions of Main Street and the other facilities you've stood up through the Fed?
Well, thank you, and I appreciate your comments. I think at the time when we passed the last CARES Act, the economy was in very difficult shape, and we needed to get money quickly. And as I'd said before, programs that took 3 or 4 months were not the focus. I think that there appears to be bipartisan support in the Senate to repurpose the $130 billion for PPP, extending it to businesses that are most hard hit, that have a requirement that their revenues have dropped significantly, things like restaurants and hotels and others, where it is critical to get people back to work.
Okay, and so that seems like a reasonable step in the right direction. Chairman Powell, the reputation you've garnered this year in particular is that your actions have been predictable, and that you signal what you're going to do and you follow through on it. Transparent, in that you lay out the metrics for action, you therefore follow those metrics. Incredible. One example is that at announcement, you said that you're going to support corporate bonds. And by saying that you're going to support corporate bonds, the market acted as if the Fed already had the program up and running, to the point where once you were up and running, people ask why you followed through on that program. Now, I think that's important to note. That transparency, that guidance, that communication has been effective in this opening stage in setting up these responses. So along those lines, the Fed took what I would call strong medicine in terms of action on the stress tests to restrict dividends and buybacks and restraints on these large financial institutions. I would call that quite strong medicine. I think what we want to understand are the metrics that the Fed is going to use in order to make these judgments and assessments sort of in this next phase over the next couple of months for these large financials?
So I think you have to start with the sort of two major facts here. One is that the banking system is very strong, has been a source of strength. The banks have been taking on a wave of deposits. They've been engaging in forbearance. They've been making loans. So they're a source of strength in this situation, unlike the last crisis where they were a source of weakness. It's also a fact that things are highly uncertain. And so to preserve that strength, what we've done is we've stopped all share repurchases and we've stopped increases in dividends. So we're preserving the level of capital in the system. So to address the uncertainty and looking forward, we did run these three sensitivity analyses, and they were really to assess the overall strength of the system in the face of these downside cases. We found that the majority of firms were still adequately capitalized, sufficiently capitalized in all of those scenarios. Notwithstanding that, what we did was that we said, for the first time in the history of these tests, we said that we're going to ask the banks to resubmit their capital plans. We're going to distribute scenarios, and we're going to look at the results again as we learn more about the path of the crisis. And in terms of the precise metrics we're going to be looking at, we'll be providing more clarity about that going forward.
But based off that uncertainty, you're asserting as a regulator that you will actively review this to ensure that we don't have a financial crisis as a result of this health crisis.
Yes, we're going to keep monitoring this. We're learning so much every quarter, and the path of the economy is highly uncertain. And you know, in our system, dividends are declared every quarter. We've already stopped the overwhelming majority of distributions, so we think that's the right place to be.
Thank you. Thanks for your leadership and effectiveness, and thank you as well, Secretary Mnuchin, for your effectiveness and leadership. Yield back.
When we're sitting. Thank you. I now recognize the gentlewoman from New York, Ms. Maloney, for 5 minutes.
Thank you and welcome. Secretary Mnuchin, I'd like to ask you about a very troubling oversight issue. As you know, I'm the chair now of the Oversight Committee, and I take these matters very seriously, and I hope that you do too. In the CARES Act, we created the Pandemic Response Accountability Committee, or PRAC, which is a committee of independent inspectors generals that is charged with overseeing all of the money spent in the CARES Act and identifying waste, fraud, and abuse. Last month, the General Counsel's Office in Treasury issued a legal opinion that questions PRAC's authority to oversee trillions of dollars of CARES Act spending. To put it bluntly, this legal analysis is so bad that it borders on bad faith. The opinion claims that no evidence that Congress did not intend for the PRAC to have oversight authority over anything in the first half of the CARES Act, including the PPP program and any of the Fed's lending facilities or the $150 billion in funding for states and local governments. So I would say, Secretary Mnuchin, that this interpretation is wrong, that it is just plain wrong. Senator Gary Peters and I proposed and authored this section of the law, the PRAC Act, and I was heavily involved in negotiating those provisions in the CARES Act. And I'm telling you that Congress's intent was for the PRAC to oversee all of the spending in the CARES Act, not just one half of the CARES Act, but all of it. That was our intent, and that was what the bill said explicitly. The interpretation from your General Counsel's office is already causing problems because it's hindering the PRAC's ability to monitor how the states are spending their CARES Act money. So now, Secretary Mnuchin, I would say that we have worked very productively together and in good faith negotiations on the beneficial ownership bill and other bills before Congress. So I hope that you'll take my concerns about this erroneous legal opinion seriously. And so this is what I would like to ask today. I'd like you to commit to interpreting this section of the CARES Act as Congress intended, with the PRAC's oversight authorities applying to all of the CARES Act spending. I think this is a small step, but a very important one that you can take to show that you're serious about the oversight of the trillions of dollars in the CARES Act.
Well, thank you, and I appreciate your comments, and I assure you we are very much committed to working with the oversight committees on transparency. Now, as it relates to this, I can assure you it was not bad faith. I'm happy to have our office follow up with you. It has to do with a technical issue of recipients reporting. As it relates to the issue of monitoring state spending, I'm more than happy to put the PRAC in touch with our Inspector General, who has primary oversight, and make sure that whatever information specifically the PRAC wants on the states that we accommodate.
Well, I would say that that's not what I'm asking. What I'm asking is, will you commit to interpreting the PRAC's oversight authorities as applying to all of the CARES Act spending? That was our intent. I wrote that section of the law. That was what Congress wanted. There's no problem with the interpretation. It's very clear and explicit. Will you commit to allowing the oversight that was in the bill?
Well, I appreciate you wrote that portion. I would also say I appreciate I had very direct discussions with people in the Senate about various different oversight. That's why we agreed to a new oversight committee with full transparency. We agreed to provide information that was not required under 13.3. So we have full transparency. And again, I'm happy to follow up with you on the specific concerns as to which different entities should receive what information. I think it's important that there is not bureaucratic overlap. But again, let me emphasize, if the PRAC needs certain information, we will try to do what we can to accommodate it.
Well, I'm very disappointed with that answer, and I guess we'll have to pursue a legislative solution. It was very clear that the intent of Congress is that PRAC would have oversight of all of the CARES spending. I yield back. And I'm out of town. Out of time.
The gentlewoman from Missouri, Ms. Wagner. The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. And thank you for joining us today, Secretary Mnuchin and Chairman Powell. I want to commend you both in the outset here for your leadership during this unprecedented time. Both the United States Department of Treasury and the Federal Reserve System have shown their ability to both effectively and rapidly respond to the economic crisis caused by COVID-19 by providing trillions of dollars to stabilize our economy. Chairman Powell and Secretary Mnuchin, lender registration for the Main Street lending program went live on June 15th, I believe. Do either of you know how many lenders have registered so far? And do you know the average size of the lenders participating? If not, when do you think this information might be made available? I'll toss it to either.
Sure. So in the range of 300 banks, and it may be higher than that, that number is a few days old, have entered the registration process. It takes a few days, so I can't tell you exactly how many, but that's how many will come out of the pipeline.
Average size of lenders?
Don't know. The size ranges from, you know, the large to the very small, and the very small are particularly well represented, but it does range across the full spectrum.
And you will be providing this information to us on a regular basis?
We're working with the borrowers to figure out the right way to connect lenders and borrowers and lenders so they can get in touch with each other. So we're working with the lenders to put something together that will make that happen in the most efficient way.
Thank you, Chairman Powell. In your efforts to create broad-based programs, do you think that the Main Street facility will need to expand any further to meet the needs of our businesses?
Let me say as you've seen, the Secretary and I work very closely on this, and we've been very willing to learn from experience and learn from what we're hearing from different parts of the economy. So we
certainly did with the PPP program, so I would hope that we would approach this the same way.
We will. I mean, as you know, we're in the relatively early stages of opening up a nonprofit Main Street facility, and I think we'll be watching as regular Main Street, fully comes online and continuing to look to see whether there are ways we can improve it.
Thank you. Chairman Powell, last week's release of the Federal Reserve's CCAR outcome and, more importantly, the results of their COVID-19 sensitivity analysis underscores the resilience, I think, of the banking system. While we can all agree that the level of uncertainty in the economy continues to be high given the progression of the COVID-19 pandemic, I believe the Federal Reserve subjected CCAR filers to extraordinary assumptions regarding unemployment and GDP contraction. Despite these assumptions, the 33 largest banks remained above minimum Tier 1 capital requirements. Given that, I'm wondering why the Federal Reserve has indicated firms will need to resubmit capital plans, and in addition, there will be an off-cycle supervisory stress test in the, quote, latter part of the year. The Federal Reserve already concluded firms' capital planning, management processes, I think approaches and assumptions passed the toughest test. So could you explain that, please?
Sure. So what the 33 institutions all passed was the regular way severely adverse scenario that we wrote before the pandemic arrived. So that's what controlled the outcome at this time. We also, though, remember the pandemic arrived right in the middle of the stress test period. So we quickly devised, without going through our usual very thorough vetting process, 3 alternative sensitivity analysis, one of which was a V-shaped recovery, one of which was U-shaped, and one of which was a serious double dip. And these are very serious downside cases. We didn't use them to evaluate individual institutions, but rather to evaluate the broad range of institutions. And we didn't.
I'm running out of time, and I just, why lock up additional capital now? I guess this has the potential to have, I think, a chilling effect on the economy at exactly the point where banks need to provide credit and liquidity to households and businesses to facilitate economic recovery and support financial intermediation in the capital markets. So I leave you with that.
No, we didn't do that. We're not looking to raise capital standards during a crisis. That's not what's going on here.
Thank you for that clarification, and I yield back.
Thank you. The gentlewoman from New York, Ms. Velasquez, is now recognized for 5 minutes.
Thank you, Madam Chair, Ranking Member. Mr. Secretary, at any time have you been blocked by President Trump or anyone else at the White House from providing access to information requested by Congress or an oversight body?
No.
Have you ever been prevented? Have you ever prevented anyone within the Treasury Department or the administration more broadly from providing access to information requested by Congress or an oversight body?
Well, if you're referring to an oversight body, not that I'm aware of, no.
Okay, so here you are, sir. Tonight, the PPP program expires, and you are advocating for extending that authorization. So you are telling us that you are already discussing this with the Senate, but there is a role for the House. And so,
of course,
yes, and I will remind you that nothing will move unless we have those conversations. As chair of the House Small Business Committee, I cannot be able, in good sense, to make a determination as to where the program should go or what tweaks or what reforms the program needs unless we have access to the data. When are you going to provide the data to our committees?
I believe we said by the end of this week, and we've reached out to your committee to make sure we establish secure.
No, we got a letter, but no date has been.
It's supposed to be delivered by the end of this week, so I will assure. And let me just say, I'm more than happy to speak to you if you'd like to set up a time to speak.
Sir, we have been contacting your office every week, asking for you to appear before the Small Business Committee with the administrator. I spoke to her last week. She intends to come before the committee. You are saying here that we need to take care of those most hard-hit businesses in this next repurpose of this $135 billion that are left. But we need to know if the program worked as intended by Congress. We know that 4 million businesses access the program. But what about the millions of minority and women-owned businesses that were not able to access the program? So you're saying maybe a restaurant might need to get a second loan. I just heard Senator Marco Rubio. Well, no one should get a second loan unless we know that most businesses who are struggling get a chance to get a loan. Chairman Powell, as chair of the House Small Business Committee, I am particularly concerned about the state of our nation's small businesses as the pandemic poses an acute risk to their survival. How would the failure of small businesses, especially those that are women or minority owned, adversely affect the communities they serve, particularly those of color? What impact could these failures have on future labor market conditions?
Of course, the effects could be very significant. Small businesses generate most of the jobs and most of the growth in the economy, so that could be very important, particularly in minority communities.
Chairman Powell, earlier this month, the OECD said the pandemic has triggered the most severe recession in a century and warned that the global economy could contract by 7.6% this year should a second outbreak hit. Do you agree with this assessment?
That particular number, there's a range of assessments, but I would say that that's in the range. And yes, I can't think of a more.
And what impact do you see a second outbreak having on both the U.S. and the global economy?
Well, I certainly wouldn't forecast that. And so this just hypothetically, a second outbreak could force governments and force people to withdraw again from economic activity. And I think the worst part of it would be to undermine public confidence, which is what we need to get back to lots of kinds of economic activity that involve crowds.
Thank you. I yield back.
Thank you. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell and Secretary Mnuchin, thank you for attending this hearing today. And I want to begin by commending Chairman Powell on finalizing the inter-affiliate margin rule. This may be the last time we discuss this, sir. While these rules may seem abstract and difficult to understand, they have a real impact on agriculture and oil and gas producers back home that use financial derivatives to manage risk and plan for the future, which, as we've seen in past months, can be, to put it mildly, unpredictable. That said, as both of you know, commercial paper finances a wide array of economic activity and provides liquidity for companies to meet their operational needs. With the commercial paper market under significant strain due to COVID-19, in mid-March, the Federal Reserve established the Commercial Paper Funding Facility to encourage investors to lend in the commercial paper market, which ultimately supports businesses and jobs across the country. Chairman Powell, could you describe the current indicators of how the commercial paper market responded to the creation of the facility? And has there been a discussion, to expand the facility to address liquidity issues faced by Tier 2 issuers?
The commercial paper facility has substantially healed. As you point out, it really closed there in the beginning part of March, as so many markets did. And when we announced the facility, the highest graded borrowers were able to start borrowing. And so largely, but not completely, that market has returned to fairly normal function. And we're watching it carefully. I would say we're not currently assessing whether to broaden the facility, but should the situation deteriorate, we would have that as an option.
Thank you. Secretary Mnuchin, there have been reports that China is restricting global agricultural imports due to COVID-19. How are we working to resolve this with China, and do you anticipate this impacting the terms of the Phase 1 trade agreement to purchase $200 billion in U.S. goods and services, particularly the commitment to purchase $40 billion in U.S. farm products?
Well, let me just first emphasize we have various serious concerns about the lack of transparency from China as it relates to COVID. Having said that, we have every expectation that they will support and live up to the Phase 1 agreement, and they are well on their way for those commitments.
One last question. Native American tribes have been hit particularly hard by COVID-19. Tribal employment is often concentrated in arts, recreation, and accommodation industries. How has the Federal Reserve and Treasury been looking specifically at the economic challenges faced by tribes?
I can answer it. As to Main Street, of course, the tribal businesses are eligible for participating in Main Street, and that's where a lot of the economic activity is there. The tribes themselves are not really general obligation issuers, so they're not particular candidates for the municipal facility.
Thank you. And with that, Madam Chair, I yield back the balance of my time.
Thank you. Mr. Chairman, you now recognized for 5 minutes.
Thank you. Secretary Mnuchin, I'm a very nice guy, so I won't mention the press reports that say that over $1 billion in stimulus payments have gone to people who are deceased. But I will urge you to adhere quickly to the agreement that you've made with the Senate Small Business Committee to very quickly release the names and data about all PPP borrowers that have borrowed over $150,000. Chairman Powell, back on March 12th, I sent you a letter urging that you prohibit stock buybacks by banks. You have done so. Thank you very much. About 2 weeks ago, you went on the record to say, I would think that it would be of concern if Congress were to pull back their support, having just said that there are 25 million people who have been dislodged from their job. I thank you for that advocacy, and I hope Congress listens. We need to do more to stimulate this economy under these circumstances. Secretary Mnuchin mentioned the support that he's providing to local and state governments, but that is all in the form of loans, and of course, almost all state and local governments can't run a deficit. So with their revenues down by hundreds of billions of dollars, I hope we pass the HEROES Act and actually provide aid to state and local governments. One issue, Chairman Powell, for the Main Street lending program that is particularly relevant to commercial real estate is that if they get a loan from you, they violate the loan covenants that they have in their existing mortgage. I look forward to working with you on that. One possible solution is the bill that I submitted, and we've had hearings on in this committee, the Business Borrowers Protection Act. Certainly getting a loan on a program that we've authorized because of the COVID crisis should not trigger and make a pre-existing mortgage immediately due and payable. I want to spend this morning at the White House with a few of our colleagues getting briefed on Russian involvement in Afghanistan. And it appears to me, Secretary Mnuchin, that they have been bold. They have killed our soldiers because when they do something else that we catch them on, we don't sanction them very much. The debate now is whether they took the obscene step of putting a bounty on the heads of individual soldiers, or whether they've limited their involvement to Afghanistan to just aiding the Taliban, but not correlating that aid to how many dead Americans this or that operation created. Of course, the response from the administration to this seems to be, well, let them into the G8 and otherwise help them. That kind of lax response will lead to more deceased American soldiers. Under the Chemical Weapons Act, which Congress passed a couple years ago, your department was supposed to sanction Russia for their violation of the Chemical Weapons Act when they used poison to try to assassinate a Russian dissident in Britain. But you opted for the weakest sanctions allowed by the act. It doesn't apply to ruble what it does is it prohibits certain loans from Americans to the Russian government. But it doesn't apply to ruble transactions. It doesn't apply to loans to state-owned enterprises. And it apparently doesn't apply to purchases in the secondary market. Given the fact that our under-sanctioning of Russia has led at least to their aiding the Taliban in a general sense, and according to press reports has led to the specific putting a bounty on our soldiers. Could you revisit your decision on this existing law and impose these bans on ruble transactions, state-owned enterprises, and secondary markets?
Well, you covered a lot of things.
It must be a tough question. You took off your mask.
Let me just comment on, we believe we followed the law and selected amongst a series of items at the time, but I'm happy to go back and I recall the situation. I'm happy to go back and look at it again.
There are credible reports that they put bounties on our troops. Please look at it again.
Well, again, on that, I just want to be clear. So for the record, I am not commenting on classified information, nor do I think it's appropriate in this setting to talk about alleged information that's in the press.
Mr. Posey, you are now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for holding this meeting today, hearing to review the Treasury and Federal Reserve's pandemic response. Mr. Secretary, I want to commend your efforts and those of the President's team, but most especially you, in working with Congress to put relief in place during these extraordinary times. And the stimulus checks and the Paycheck Protection Program have been tremendously successful in bringing much needed relief to hard-hit American families. It's been huge. Nothing anything like it before. It's great. It's the very best there is.
Thank you.
I want to commend Chairman Powell for his leadership to keep the financial markets stable and liquid in the face of the downturn in the general economic conditions. We await the full implementation of the Main Street Lending Program, and I'm looking forward to hearing more about that. First question is, our nation's hoteliers have been facing one of the most severe downturns in demand of any sector of our economy. The revenues have plummeted as much as 80% during the shutdown, and extreme curtailment of travel, as you know. I'm wondering, and I'd like a response from both of you, if you have the authority you need under Section 13.3, sub 3 of the Federal Reserve Act, and more broadly the CARES Act, to address the liquidity and cash flow crisis that the hotel sector will be going through. So, either one first.
I'll go ahead. We are not looking for additional authority under 13.3. Our authority is, of course, to lend to solvent institutions and in programs of broad applicability, and any company in any sector that meets those tests can borrow one of our facilities.
Yeah, the only thing I would just add to that is that we do appreciate, and certain comments have been made by this committee already and others, as it relates to loans that are in securitizations, and particularly hotels and other real estate that was properly levered beforehand. It does not lend itself as well to the 13.3 facilities, and we continue to look at that.
Okay. Mr. Chairman, some of our businesses, including, again, the hoteliers, are warning that their inability to make payments is threatening the servicing of commercial backed securities. And I just wonder if you can bring us up to date on the status of the CMBS market.
Well, as I just mentioned, one of the problems of the CMBS market is there are very strict contractual obligations. And that's why one of the things I do think we need to look at in the next CARES Act is additional funding for these industries that are the hardest hit, so they can continue to rehire people, so that as occupancy increases, that they have employees that they can maintain.
Great, thank you. I recently wrote to both of you expressing my concern for businesses that are asset-based, and I believe they'll face hurdles to assessing Main Street lending facilities. because of the nature of their business challenges, their ability to meet lending criteria based on the earnings before interest, tax, depreciation, amortization, so-called EBITDA. For example, an aircraft developer in my district, especially an R&D organization, falls into this category. And I wonder if you could tell me what the possibilities are of providing access to Main Street lending facilities for businesses like that. And you go first, Mr. Secretary.
We've discussed about looking at asset-based financing, and that's something we continue to discuss with the Federal Reserve.
Mr. Powell?
Yes, that's where we are.
All right. Thank you, Madam Chair. I'll yield back.
Thank you. Mr. Clay, you're now recognized for 5 minutes.
Thank you so much, Madam Chair, and thank both witnesses for your participation today. Mr. Secretary, I'm somewhat troubled by recent reports that some banks have taken stimulus payments from individuals and families with garnishment orders or negative account balances to offset unrelated debts owed to them. I find it troubling that banks would serve as debt collectors at a time like this when families need the resources most. When will Treasury issue guidelines articulating your expectation that financial institutions refrain from taking stimulus funds away from their customers during a time like this?
Well, let me first say I agree with you, and that I think it would be awfully unfortunate if banks are doing that. We have had inquiries about the issue of garnishment, and we agree from a policy standpoint that there should have been no garnishment. Unfortunately, that's something we need to address in the next CARES Act if we do additional direct payments, because there are certain state laws that were not overridden in the existing CARES Act. But my understanding that's a state issue and not a federal issue. But we agree from a policy.
But think about the cruelty of the policy. Wouldn't you want to?
As I said, I agree with you on the policy.
Couldn't you all issue a blanket?
We've asked our legal department, and unfortunately we can't, and that's one of the things we would want to fix in the next CARES Act. So we agree with you from the policy standpoint.
Thank you. Chairman Powell, for many nonprofits and small businesses, earnings before interest, taxes, depreciation, and amortization is not a widely used metric. Have you considered applying other metrics of debt, future growth, or financial health to the Main Street lending program so that nonprofits and small businesses are fully able to participate?
Yes, as a matter of fact, we have, particularly for nonprofits, of course, earnings before interest taxes doesn't make any sense. So you don't need to take taxes out. They're nonprofits. They don't pay tax. So we're looking at a range of, and we actually put this out for comment. We got a lot of very thoughtful comments from the nonprofit community of looking at cash flow and also financial resources more broadly. In terms of companies, EBITDA is just basically pre-tax cash flow. It's a very widely used metric, but there are other metrics. And as the Secretary mentioned, one of them, probably the next one in line, is something along the lines of asset-based, and that's something that we're looking at with the Treasury.
Now, under the Main Street lending program, you reduced the minimum loan threshold from $1 million to $250,000, and then by expanding the program to nonprofits with more than 50 employees. However, many small businesses may not need $250,000. Mr. Chairman, has the Fed considered eliminating the minimum loan threshold altogether?
We have not considered eliminating it yet. Of course, we're just now getting rolling with loans, as you know. So we can, once we get up and running, look at lowering it again. But you get into a very different kind of lending when you're down lower. These are really personal loans rather than business loans. They're generally guaranteed by the business operator. And we could look at that, but that would be something we'd look at once we get up and running.
Yeah, but I mean, it's kind of concerning that you have that threshold at $250,000 when, say, small business in St. Louis needs 100,000 to survive through this pandemic until they get back on their feet. Any consideration given to accommodate?
Yes, no, we can see ourselves possibly lowering the threshold again, but just logistically for us to be making very, very small loans would be difficult, and those people may be better dealt with through fiscal policy. But I can see us down the road looking at a lower threshold.
I see. And thank you both for your responses. And Madam Chair, I yield back.
Thank you. Mr. Scott, you're recognized for 5 minutes.
Thank you, Chair Lady.
Yeah,
I'm on now.
Yeah.
I think I need Chairman Powell. Now, we all know that job losses have disproportionately impacted women, African Americans, and other minorities, but at the same time, our capital markets have improved significantly since the epidemic. Why is this? Is there something you're doing more so to help the capital markets than helping job losses corrected?
No, not. In fact, the objective of everything we're doing, single thing we're doing, is to take the 25 million people whose working lives have been disrupted and create a situation in which they have the best chance to go back to their old job or to get a new job. And that includes all the facilities that we're doing. That's the overriding goal of what we're doing, and every one of them helps in that direction.
Yeah, I know that's your goal, but what I'm trying to get at is it correctable? Are there some things you can do to fix this imbalance between staggering, lowering unemployment and soaring rise in our financial capital markets?
So we're trying to, what we've been trying to do is create accommodative financial conditions and a supportive financial conditions so that when the economy reopens, remember we sort of deliberately closed down so that when the economy reopens, that expansion can be vigorous and strong, and it's just beginning now. So our support for that is part of what's driving the job growth that you saw in May, which was surprising to the upside.
Yeah, I also, while we got both of you all here, I want to pick up on what Chair Lady Waters was saying. We got a great opportunity here to do both of these things with our housing and homeowner tranche that we're putting forward. This goes right into the belly of our economic wheelhouse. Jobs, keeping people secure. Because it's coming, man. When you lose 25, 30 million people lose their jobs, how they going to pay their house note? How they going to pay the rent? How they going to pay utilities? And more than that, how are the banks and the financial institutions going to get their mortgage payments in so that they can make payments for the securitization of those mortgages that keeps our financial system healthy? So I want to ask you to make sure that you all start talking about these things that we are putting forward. May not be everything you agree with us on, but this is one that is very important. Now let me go to one other area, to you, Secretary Mnuchin. None of the lending facilities established have targeted the needs of our agriculture industry. Now, why do I mention that? Food. It's coming. I mean, I can't see why people can't see this crisis. Food shortages are coming. It's almost like the farmers have been the forgotten ones. Are they are they qualifiable as small businesses? Many of them don't know. They're sort of out there, just drifting along the misty flats. What are you all doing to help lift up and make sure that we give our farmers, our rural communities, the kind of help that they need? Because all the food chain is going down. You hear about the closures, the food processors are going out, farmers are coming. These are small, most of them, but they're very important. Why can't they be qualified as small businesses? Where are they? They're getting lost in the shuffle. And if we get a food shortage, we're in, well.
Thank you, Mr. Lukemeyer. You're recognized for 5 minutes. I would encourage all of the members to keep their mask on, please.
Thank you, Madam Chair. And thank you, Secretary Mnuchin and Chairman Powell, for being here today and for your great leadership during this time. As we've gone through this, you guys have been very responsive. You've been very cooperative. I can tell you from discussions that we've had in different settings, you've implemented lots of suggestions that we've come up with as a group, as Congress, and for that we're grateful. Leaders make tough decisions in tough times, and you both exhibited the ability to make those tough decisions, so thank you very much. Both of you in the past have expressed your support for housing finance reform and GSE credit risk transfer, CRT. And in prior testimony, you've committed to reviewing your prospective policies to determine whether capital relief is appropriate for U.S. banking organizations that engage in CRT with sound counterparties. FHFA recently reproposed a capital framework for Fannie and Freddie, which adopts much of the U.S. banking framework, but in doing so, seems to have taken a confused and more punitive approach to certain types of CRT. I'm encouraged by the questions posed in the proposal that would seem to indicate there remains room for revision before the rule is final. I ask each of you gentlemen whether you still agree that it is appropriate that the enterprises should receive meaningful capital credit for sound CRT transactions they conduct with sound counterparties and avoid the accumulation of credit risks on the balance sheets of two institutions that remain taxpayer-backed. One of you?
Yes, I agree that they should receive relief, that we should encourage them to do credit risk transfers with credit-worthy counterparties, and I can also tell you FSOC is beginning to review these issues as well.
Chairman Powell, you want to comment on that as well?
Yeah, no, I do agree, and we're actually in the middle of doing a careful review of the whole capital proposal as well.
Okay, thank you. As you know, it's hard for me to let a hearing go without talking about CECL, so we're going to try it one more time. In March of this year, the Federal Reserve and the FDIC and the LCC issued an interim rule to delay for 2 years the estimated impact on regulatory capital of CECL, followed by a 3-year phase-in. In addition, the CARES Act included an optional delay in CECL implementation until the end of 2020 or the end of the pandemic, which 25% of applicable entities actually opted for. Department of Treasury is also conducting a study of what the impact of CECL, I hope. We were directed to do that. And most recently, my colleagues and I sent a bipartisan letter to FSOC urging for delay in CECL implementation for all entities until 2022, so that every entity, both banks and non-banks, which were not included in the CARES Act, are on the same footing, and Treasury can conduct this study with the input of a real-life scenario that we have going today. Given the actions by Congress and the prudential regulators, should we delay CECL as I and my colleagues have called for? And should the Treasury examine the real-life scenario we've gone through when conducting their study? Mr. Mnuchin?
I think that should be seriously considered, and yes, we are working on the study.
You know, the President issued an executive order with regards to each agency going through and looking at all the rules, regulations that were either waived, declined, changed, whatever. If they don't work now, why should we continue them down the road when we get out of this mess? And so I assume everybody is doing that. And this particular accounting principle would seem to fall in that area of we need to be looking at this as something down the road we need to get rid of in its entirety. Mr. Powell, Chairman Powell, would you like to comment on this as well?
No, I would agree.
Okay, thank you. Appreciate that, because I think there's a time and place for rules and regulations. There's a time and place that if they're not functioning, we need to get rid of them and start over. With the nationally recognized statistical rating organizations, and the Federal Reserve emergency facilities. I know you've heard a lot about this issue from members on both sides of the aisle, Chairman Powell, especially. The Fed took modest steps to include smaller NRSROs in the most recent FAQs, but only if those ratings are accompanied by one of the three incumbent NRSROs. I remain concerned that Fed's unilateral and haphazard tiering of these NRSROs is going to have serious implications for small and mid-sized businesses. Have you examined the impact the delineating between the large and smalls is having in the marketplace?
Well, as you mentioned, we started out getting these facilities set up very quickly, and we just went with the big three. After that, I think more than a month ago, we broadened it out to another group after taking a look. And, we're balancing the need to move quickly and to move with institutions that we know well or that are well known, and then we've included more and more, and that's a process that we're still looking at.
Okay. All right. Thank you very much. I yield back, Madam Chair.
Thank you. Mr. Huizinga, you are now recognized for 5 minutes.
Point of inquiry, Madam Chair, should not be on the other side of the aisle. Oh, I'm sorry. Okay. All right. So, well, thank you. I appreciate that. Chairman and Mr. Secretary, the word unprecedented has been banned in my house by my college, graduate. He graduated remotely because he was looking around and was a little tired of that word maybe being used. So he has a history. His grandfather, my dad, was born in 1921 on a kitchen table in the hired man's hand at home. My mother was born in 1931 in Flint, Michigan. Yes, that Flint, Michigan, and had to move to Oklahoma into the Dust Bowl in the middle of the Depression to try to survive when they lost their house and my grandfather lost his job. We know that there's history behind this, so I'm not sure if this is unprecedented. It certainly may be unprecedented in a way in the modern era where we've seen the government come in and sort of shut this down. But what we do know is from looking at history is we need to get the economy moving again. Now, the question is how? Whether it's getting kids back to school, as some have suggested, because if you can't get kids into school, that's not going to then free up those parents to be available to work. Anecdotally, in my area, I know that manufacturers and service companies are having a very difficult time getting enough workers to come in to complete a full contingent of line workers, for example, or to get a full shift filled. And there's various reasons. Some have debated about the $600 additional per week kicker as being a bit of a disincentive. But nonetheless, we know that we have to address those folks who really, truly are not able to get a job, and how do we distinguish from those that are just deciding not to take that job? One of the things that I have proposed is something called the Patriot Bonus. Patriot Bonus would be a 50% tax credit to any company that would give a per-hour bump to their employees, or a weekly bonus to their employees, or even a one-time bonus to their employees, to incentivize them to come off of that unemployment insurance system and get back engaged in the workforce. And I think it's critical that we do that. I do want to say also thank you for your work on the Paycheck Protection Program. I've talked to Cheryl, who owns a very popular bagel and coffee shop in my hometown, who knows that she survived because of it. Don, who owns a bowling alley in my district, who was able to keep his folks on the payroll. Those types of things are critical and were very, very important. As we're shifting to the Main Street program, I do want to draw attention, and Chairman Powell and I had this conversation a couple of weeks ago. I brought up Lacombe. Lacombe is a Philadelphia-based company that has a manufacturing production facility in my district. It's a 26-year-old fast-growing company. You may have gotten their coffee in the can, and they produce a number of great products. But for the last 6 years, they've been really focused on their growth. And that also means they've had to borrow a tremendous amount of money, and that led to an accumulation of debt. Under some of the rules as they're currently written, Lacombe would not qualify to participate in the Main Street lending program. And I believe that the way that the leverage ratio requirements in the program are currently drafted really sort of frankly punishes companies like Lacombe and others who would otherwise be viewed as really, frankly, success stories. If it is the way the rules are currently written, it's designed to prevent funds from going to companies that have this debt, but sometimes those companies might be some of those that need it the most. I'm hoping that you'll commit, Mr. Secretary, to working with me on that to address that issue.
Yes, I'm not familiar with the company, but we're happy to follow up with you and see if it can work.
Great. And then in the remaining time, I talked to Jeff this morning. Jeff is 52. Talked to Jim and Liza. He's 64. She's slightly younger. She won't tell me exactly how old. But what I do want them to know is I want them to hear from you. What do you want to tell them and the rest of Joe and Jane 401k that have their small investments in the markets that are there, frankly, to help them as they approach retirement? What assurances can we give them about the economy?
Well, I want to tell them and all the other people that we are going to work with Congress to make sure we can do whatever we can do to get everybody back to work who lost their job due to COVID. And I'm also extremely optimistic about the research that is being done on vaccines and virals and us combating this terrible disease.
Thank you.
Yeah, I would just say.
Mr. Meeks, you're recognized for 5 minutes.
Thank you, Madam Chair. Mr. Powell, you and others at the Fed have written and spoken about the importance of maintaining the economy at full employment as a way to pull a greater share of the minority workforce upwards, which is often the first to be laid off and the last to be hired. And while this is helpful, this is incredibly frustrating, as it is an admission that everyone else gets a head start in the economy, and communities of color only get out of the starting blocks after everyone else has been running the race for months, years, or decades. So let me ask you first, Mr. Powell, do you agree that structural discrimination exists in the United States economy today and impedes the economic success of communities of color and is a key to understanding why Black wealth is just 10% that of white communities?
Yes, I do agree.
Mr. Mnuchin, would you agree also?
I agree we need to do everything to create a level playing field, yes.
So I also believe that our approach to redressing the legacy of economic racism and discrimination must include equity investments. Communities that have been financially excluded for decades or hundreds of years, that were disproportionately impacted by the financial crisis and now by the COVID pandemic, cannot borrow their way out of poverty and economic exclusion. I believe that sizable equity investments over the coming decade or more into communities of color will be essential to substantially lift them out of poverty and build resilience. And I'm working on a proposal for creating a national investment fund, pulling together capital from both the private sector and government to invest in these communities over the next decade or more. So, Mr. Mnuchin, Secretary Mnuchin, do you agree that massive amounts of equity investments will be required to lift these communities and that debt alone cannot solve the problem?
I definitely think investments in these communities is important, and we look forward to working with you on your specific ideas.
Oh, great. And the same with you, I guess, Mr. Powell. Can we count on the fund and you working with us?
We'd be delighted to.
So back to you. Given that, Secretary Mnuchin, the Treasury Department has the capacity and the authority to invest Tier 1 capital into minority depository institutions, MDIs, but has never done so. Similarly, the Treasury Department could use existing authority to mobilize deposits from trust funds into MDIs, either directly or through custodial accounts, but it does not do so. And since we agree that we need to have investment, would you agree that MDIs play a critical role, as we found during PPP, in providing minority communities access to capital? And ask you then, will the Treasury use its existing authority and capital to provide direct support to MDIs?
I'll have to review those authorities and get back to you. So if that's something we have, it sounds very interesting. I'm not familiar with those specific authorities, so let me look into it. And let me just say also the CDFIs did a terrific job as well.
I agree. I should have added the CDFIs. We concur on that. So, but I look forward to working with you to make sure that we're investing. I mean, we have, public money as well as private money to invest in those MBIs so that they have the capital and the wherewithal to move forward. That is the way to go. Now, have the Fed and or the Treasury Department made on another issue, I'll ask Mr. Powell this, has the Fed made a requirement of all asset managers and broker-dealers with which they contract to partner with minority firms in fulfilling contracts and transactions?
Yes, we do have obligations, for example, with the companies we've contracted with during the pandemic. They have to address diversity and inclusion issues at their company, and they have to also reach out to minority suppliers as well.
And the Treasury, Secretary Mnuchin?
Yes.
Okay. So then I'm hearing from both of you that you'll commit to incorporating this and making it a standard for the Fed and the Treasury policies across all capital market programs that involve partnerships with private sector asset managers or broker-dealers going forward with minority broker-dealers and asset managers. Is that correct?
That's really part of our rule book now, actually.
Mr. Mnuchin?
Yes, that's something we work on as well.
Thank you. Out of time, I yield back.
Mr. Stivers, you're recognized for 5 minutes.
Thank you, Madam Chair. Thanks for being here, Mr. Secretary, Mr. Chairman. I really appreciate it. Secretary Mnuchin, I'm hearing from some lenders that are being accused of failing to pay agents who assisted businesses in preparation of their Paycheck Protection Program loan submissions. And before participating in PPP, I heard comments from banks that they were worried they might be exposed to legal liability without sufficient safeguards in what's essentially a government grant program. But they largely participated anyway because obviously they felt like they had a duty to their customers in the country during a time of need. Now I'm told that many banks are being targeted by litigation that takes advantage of the lack of clarity about how agent fees are supposed to be processed and how they work. For example, banks don't have precise answers on where the fees were supposed to come from. Is an agreement between a bank and an agent required before any work on the application is completed or processed? Is this an issue you're aware of? And does Treasury have a plan to offer any additional FAQs to clarify the issue of agent fees and when they're due and how that works?
So I have recently become aware of this issue as well. What our guidance did say is that banks could pay agent fees out of the fees that they received. That was intended to be based upon a contractual relationship between the agent and the bank. And to the extent there's any confusion on that, we'll look at clarifying that.
It'd be great if you could do a clarifying FAQ because I think it'll prevent some litigation or at least allow for that litigation to move expeditiously and less costly through the process. So
we'll review that.
Thank you, Mr. Secretary. Chairman Powell, Treasury and the International Association of Insurance Supervisors have stated publicly that proposals to retroactively amend business interruption insurance policies to cover COVID-19 claims would endanger financial stability. Specifically, AIIS stated that they caution against initiatives seeking to require insurers to retroactively cover COVID-19 related losses, such as business insurance, and that those things were excluded in the insurance contracts. Such initiatives could ultimately threaten policyholder protection and financial stability. Do you share the concern requiring payouts of uncovered policies and that they could result in insurer insolvencies and destabilize our financial system?
So that's an issue that's really kind of outside the periphery of our authority, except as you point out, to the extent to which it relates to financial stability. So we're monitoring it. So far, we haven't taken a position on that, but we're aware of it.
Please continue to monitor it. If it results in any kind of destabilization of the financial system, that's your role. I get it, and I'm not asking you to exceed your role, but please pay attention to it. Chairman Powell, could you kind of give us an overview of the current state of municipal finance markets and the effectiveness of the Fed's efforts to stabilize those markets?
I'd be glad to. So the municipal markets, like so many other markets, really just about shut down in the middle of March, and we announced the municipal liquidity facility, and really that announcement has had an enormous effect on the functioning of that market. So you see a lot of healing in that market. You see plenty of issuance of issuers of different credit ratings and also different kinds of issuers, revenue issuers. So it hasn't returned to where it was in February of 2020, but there's been a lot of progress. So as an example, the state of Illinois did most of its financing in the private markets without our support, and then came to our facility for its last piece of financing. So I'm very pleased that the announcement effect was very strong and effective, and is helping a lot of borrowers now.
Finally, I just want to say thank you, Secretary Mnuchin. Thank you, Chairman Powell, for your incredible leadership and availability through this crisis. This hasn't been easy. Clearly mistakes will happen when we're in uncharted waters, but you both have been bold in your leadership. You've made a difference. You've helped businesses survive. You've helped the economy survive. Thank you for your incredible leadership. And we wouldn't be doing as well without it. There's more work to be done. I appreciate everything you have done, and hope you'll continue to focus on small businesses and medium businesses around Main Street, because they're still struggling. Thank you so much.
Thank you. Mr. Green, you're recognized for 5 minutes.
Thank you, Madam Chair. I thank the witnesses for appearing as well, and I'd like to lay a proper predicate for my questions. According to the latest HMDA data, in 2019, the vast majority of home purchase loans went to white borrowers at approximately 10 times that of loans that went to black and AAPI borrowers. Here are the numbers. The share that went to white borrowers, 60.3%. To Hispanic borrowers, 9.2%. To AAPI borrowers, 5.7%. And to black borrowers, 7%. 60.3% to white borrowers, 7% to black borrowers. Even when lending discrimination does not result in outright denials of credit, it drives up borrowing costs for minority home buyers. Loans to black and Hispanic borrowers continue to be higher priced for both conventional and non-conventional loans in 2019. Home purchase loans were higher priced for the following share of borrowers. To black borrowers, 20.3%. Hispanic borrowers, 23%. White borrowers, 8.3%. Consistently, we see empirical evidence indicating that there is invidious discrimination in lending, especially as it relates to people of color. So here are my questions, dear friends. Adjusting for education, credit score, assets, and other relevant factors, do you believe that invidious discrimination in lending exists against borrowers of color? I have been collecting these pictures. I keep them in my office. These are pictures of people who deny the existence of invidious discrimination as it relates to people of color. So my question to you is, do you believe that this invidious discrimination exists in lending as it relates to people of color? If you do believe so, would you kindly extend a hand into the air? All right. Would you kind of hold it up just like to get a good picture of you, Mr. Secretary? All right. Thank you very much. Now, next question. Do you believe that this invidious discrimination against borrowers of color can be addressed with legislation? Can we craft legislation to help end this invidious discrimination? If you think so, would you kindly raise a hand? Legislation. Can we craft legislation? Chair Powell seems to think so. Mr. Mnuchin?
Can I respond to the answer?
Well, you can respond, but if you would be so kind as to let me know where you're going first. Sometimes when people finish, I don't know what they've said.
I think
this wouldn't apply to you, of course. So,
I think we have legislation, so I think we need to do a better job. So I'll say we can look at legislation, but I think it's more than just legislation.
okay, I agree with you that it's more than legislation, but would you agree that legislation can be a part of the remedy? If you'll kindly extend a hand. Thank you. Now, I'm in agreement with you. We have a couple of pieces of legislation. H.R. 149, the Housing Fairness Act, helps to deal with discrimination in housing as it relates to people of color and others as well. And then H.R. 166, the Fair Lending for All Act, that would put an end to this race-based lending and discrimination. Two pieces of legislation, hopefully they'll move in Congress. But here's my final question. I believe that it's time for us to reconcile in this country. We've survived slavery, but we didn't reconcile. We survived the invidious discrimination that exists now, segregation, but we haven't reconciled. If we had a Department of Reconciliation with a Secretary of Reconciliation, would you work with a Secretary of Reconciliation, your departments, the agencies that you represent? Would you work with such a person to help us reconcile in this country? If so, raise your hand. All right.
Not knowing what that is, I guess, sure, if there's a department, then,
Well, I can tell you it would be a department designed to eliminate invidious discrimination and racism. That's what it would be all about at the cabinet level, hopefully. Thank you both. Thank you, Madam Chair. You're back.
Thank you. Mr. Barr, you're recognized for 5 minutes.
Thank you, Madam Chair, and to Secretary Mnuchin and Chairman Powell, I want to thank you all for your very decisive and aggressive actions that you all have taken from the outset of this pandemic. I think both the Fed and Treasury, through the emergency lending and with the tools that we've given you through the Exchange Stabilization Fund, have really made a difference in making a bad situation a lot less bad given the circumstances. So thank you for your actions. And as an example of the agility that you've shown, Secretary, let me thank you in particular for responding favorably to a letter that Representative Hill and I sent to you about streamlining and making less bureaucratic the loan forgiveness application under the PPP program. That was tremendously helpful for both borrowers and lenders, cutting that red tape. The easy form is very welcome, and appreciated the fact that you were responsive to that. Let me ask you a follow-up question about commercial real estate. We've had a couple of questions from Mr. Sherman, Mr. Posey. This is a problem we have not addressed yet. And I'm hearing from many commercial property owners and borrowers in my district across the country, especially hoteliers, where occupancy rates remain very, very low. Shopping center owners, retail clearly has not recovered. Other businesses significantly disrupted by the pandemic. I think we're going to see, without intervention, a wave of foreclosures and defaults. And Secretary, you did identify the problem with the inflexibility of these servicing agreements. But I think you mentioned that we might need additional legislation to allow hoteliers to hire back workers. That's really not the issue. The issue is debt. They can't service their debt because they don't have revenue. So my question is, you both of you all recently received a letter from me, Congressman Taylor, Congressman Heck, Congressman Lawson, plus over 100 of our colleagues urging the Fed and Treasury to establish a facility to assist commercial real estate borrowers, especially those with CMBS loans. Secretary, you testified that you have $250 billion remaining in the ESF. To both of you, Does the Fed currently have the authority to establish such a facility? And do you feel that market conditions in commercial real estate warrant action by the Fed and Treasury?
Well, let me just appreciate and thank you for your letter. This is a large challenge. So we have, working with the Fed, we have not yet figured out a way to set up a facility. So it's not out of a lack of interest or a lack of desire. There are structural problems. And let me just add, in many of these cases, these companies don't need more debt. They need support. So one of the things we will want to look at in the next CARES Act, as I said, is additional support for these hardest hit industries. As the chair has said, there's a difference between lending and spending.
Right. Chairman?
I just would echo, and I've got your letter right here. I've been very focused on this, and you said it in your comments, and it's in the letter. More debt may not be the answer here. Debt doesn't solve every problem. You've got people who can't currently service debt. You've got these inflexible arrangements. So there's a serious problem here that needs to get fixed, and we're racking our brains to see how it could be something we could do by lending. But that's really what we can do, is create more debt.
Yeah,
so,
I would encourage you to consider, in some cases, the covenants against additional indebtedness may be too restrictive that these owners could take on additional debt to get them through this period of time. But I look forward to working with you, whatever the answer is. Real quick on Main Street, Chairman Powell, I have heard from a number of lenders and business owners who indicated that the terms of Main Street may discourage borrowers from applying and lenders from participating. Some lenders have welcomed the changes made recently by the Fed, but many are still far from enthusiastic about participating. What has been the response thus far from the lender community, and how is the Fed going to encourage lender participation given the hesitations?
We've had a lot of interest. We do webinars, we do outreach, and as I mentioned earlier, we've had something like 300, a little more than 300 now, I think, turn up. What the banks tell us is, though, that it's sort of a mixed thing. They're not getting a ton of interest from borrowers, and many of them say that they expect that'll change, over the course of the next few months. They do expect that demand from borrowers will increase. And I'll just echo that we continue to be open to playing with the formula and making adjustments going forward.
My time has expired, but the reason why Main Street doesn't work for commercial real estate is that EBITDA limitation, as you know. But thank you. I yield back.
Thank you very much. And Mr. Powell, the issue of commercials that we've talked about, it's on my radar. We'll continue to talk about this issue and pay attention to what you're saying to us about it. With that, Mr. Cleaver, you're recognized for 5 minutes.
Thank you very much, Madam Chair.
Where is he? Where is that guy?
I'm sorry.
Yes.
Thank you very much, Madam Chair. Secretary Mnuchin, thank you for being here. Chairman Powell, thank you for being here again. I know that you've been asked by a number of members before me about the issue with Black and brown business owners being left out of the pot that we clearly intended to help during these downtimes. And so I'm frustrated, like a lot of people, not only in Congress, but a lot of people around the country. What is your philosophy, Mr. Secretary? Maybe not philosophy, but what do you have to say to a question, why weren't rural and minority businesses more equally supported in the emergency program? I mean, what do you think happened?
Well, let me just first say we need to all do a better job at making sure that we have sources of funds for those businesses and to support those businesses. In the PPP, we've worked with lots of different people to make sure the CDFIs and the MDIs get there. But across the board, we can always be doing a better job.
And thank you. I guess where I'm now, because I'm here dealing with these minority businesses right now. And if I say we all agree we need to do a better job, do you have any ideas or an idea on specifically what we can do better?
Well, we'd be happy to work with you on that. We've been working with Robert Smith and a bunch of external people to try to figure out how we can use the CDFIs, how we can make sure MDIs have more access to capital. And I think there's a lot of good ideas out there that we need to continue to explore before we have a one solution. I think there's multiple solutions.
All right.
I'll just add, Mr. Cleaver, I'll just add that we're doing a great deal of outreach with MDIs and CDFIs to get them access to the programs that we're doing, including the PPP. And, in fact, we have a meeting with the National Bankers Association tomorrow on July 1st. So we're doing a lot of outreach, and, we think it's having an effect.
Thank you. Actually, after you appeared before our committee, I did have about a 35-40 minute meeting with Esther George here in our the Kansas City Fed office, and I said I appreciated her going into detail about issue that we were raising as best as she could. So thank you for doing that. I appreciate that. I just was hoping that the Secretary would understand the pressure that these businesses are under, which means that as representatives of theirs, we are also in tremendously pressurized situations, and I was, hoping that I could go back and say, this is what we're going to do henceforth. But I appreciate where we are. Many of my colleagues have already raised the issues I was going to raise. I would just say, you mentioned earlier, you can't respond to any classified intelligence, so I won't ask those questions. But I am nevertheless going to send you a letter, and I don't even expect a report. I'm doing this for my own personal historic concern, and that is, I'm sure that the next generation and the generation after that will be asking us, Grandpa, what did you do? Grandma, what were you doing during those times when things were going off the rails? So thank you both for appearing. I yield back, Madam Chair, the balance of my time.
Thank you very much. Mr. Tipton, you're recognized for 5 minutes.
Madam Chair. Thank you, Madam Chair. Appreciate Mr. Secretary, Chairman Powell, you taking the time to be able to be here. Do appreciate all of the efforts that you've made to be able to stimulate the economy and to be able to help our folks at home. Did want to bring up an issue that we've heard back from our district. As under the CARES Act, the government did provide for communities of 500,000 or more people to be able to apply directly to Treasury for assistance. In Colorado, that translated into 59 of the 64 counties in Colorado were unable to be able to receive direct assistance. And full recognition, obviously, that additional dollars went in over and above the direct assistance that was able to be applied for. And I guess, Mr. Secretary, what I would like to be able to see from you is there been any oversight to be able to do what I believe was the congressional intent, to be able to get those dollars back into small communities like those that I represent, and have we had any sort of an examination of how those dollars are being spent by the states?
Well, let me just say we agree with you. We thought the purpose was that we sent money to cities above 500,000. The reason why we didn't do it to less was purely administrative. We've put out guidance saying that the states should distribute money down. We've also had discussions with the IG to review this. So we appreciate your comments.
Well, thank you, and I appreciate the recognition that the small communities happen to, when we look at small business, that was my real life. We create 7 out of 10 jobs, and a lot of that does happen to be in rural America. And appreciate your attention to that as we're looking forward to any other package that may come forward. One of the biggest aspects I think that you've both spoken to is the ability to be able to get the economy going and to make sure that we're going to be able to create jobs once again. But providing access to credit is going to be ultimately critical to being able to do that. We have some that are tempted to be able to wipe credit slates clean during the pandemic, but I believe it's important that we do have an accurate and full credit profile to be able to have risk mitigation that will help ultimately reignite lending in the country more quickly. Secretary Mnuchin, would you speak maybe to the importance of being able to maintain unaltered and complete credit profiles so that lenders can evaluate the creditworthiness of borrowers?
Yes, I believe that's very important.
You know, one of the bigger issues that we're hearing on PPP is that lenders across the country, big and small, readily answered the call to be able to make those loans out to our small businesses during the crisis. And since there was essentially no guidance when lenders began providing PPP loans, what can agencies do, Mr. Secretary, to the extent to hold them harmless in terms of provisions to the entirety of the PPP process, adequately protecting the lenders who are trying to be able to do the right thing?
Well, the lenders were merely intended to be an intermediary. They were the fastest way that we could get money to the businesses. Most of the certifications were certifications that the borrowers had to make and that they would be liable for. There were a few things that the lenders had to do, which was check the payroll and payroll documents. But yes, it was supposed to be predominantly a pass-through mechanism.
Okay, thank you. And there is an interim final rule on lender fees out of the SBA, indicating that if they conduct a loan review and determine that the borrower was ineligible for a PP loan, the lender is not eligible for the processing fee. The SBA was also able to draw a clawback feature of the fee within 1 year if they determine that the borrower isn't eligible for the PP loan. Considering that those lenders, as we noted, did act in good faith through the PPP process and dedicated significant amount of resources to be able to help the economy, why did the agencies decide to be able to take this approach?
Well, let me just say, I hope that's a very small number of loans that turns out to be. But the thought of the taxpayers paying fees to loans that weren't made seemed to be unfair. And I would just say in general, I think the fees were very attractive to the lenders. So if there were a small number of loans that they made that were the case, I think they were still well compensated.
Thank you, Mr. Secretary, and I yield back, Madam Chair.
Thank you. Mr. Perlmutter, you're recognized for 5 minutes.
Thank you, Madam Chair. Gentlemen, thank you for your testimony today. Thank you for your leadership in the first 3 months of this emergency. The pandemic dealt a real blow to the economy, and you helped cushion the blow. But we're not out of this thing by any stretch of the imagination. And around Colorado, we see California, Utah, Arizona, Texas, with rising case numbers, rising hospitalizations, rising death counts. And we also know that at the end of July, the pandemic unemployment insurance payments cease as it's currently written. We know that a number of the moratoria on evictions and foreclosures begin to cease. And the 8 weeks provided under the PPP, certainly for those initial takers of the loans, start to run out. So I see a brick wall at the end of July. And Mr. Secretary, you played a key role in helping to fashion the fiscal pieces of this, the CARES Act. We call what we've done as this next iteration the HEROES Act, so that law enforcement, teachers, transportation workers, medical staff don't get laid off, in addition to the ones that already have been laid off by local governments, by state government, by school districts. So I asked Mr. Powell a question when he was in front of our committee a couple weeks ago on state and local government assistance to backfill the tax revenue. He says, I will say, though, from a standpoint, state, local governments employ something like 13 million people. States have to balance their budget, and revenues go down and expenses go up. And what states do is they cut costs. And we've seen state and local governments lay off 1.5 million people already. State and local governments provide essential services, as we all know, so you know they're a great and a big employer, and I would say it's certainly worth considering. If we don't do something, it will hold back the economic recovery if they continue to lay people off and if they continue to cut essential services. And in fact, that's kind of what happened post the global financial crisis. So, Mr. Secretary, as you again are sort of in the middle between the House and the Senate and the White House, I can't ask, where are you on assisting state and local and school districts to help backfill the lost revenue that we've seen hit them already?
Well, let me just first say, within the context of the last CARES bill, we tried to issue guidance that was as flexible as possible, particularly for firefighters, first responders, and policemen, so that states could use that money and had a safe harbor and didn't need to let any of those people go, which, as you said, this would be the worst time when we need to support all those people. I'm committed to working with both the Democrats and the Republicans and the House and the Senate in July. As you said, we have a lot of important features that all come to an end in July. And I'm committed to continue to have these conversations and take great pride in the fact we had enormous bipartisan support in the previous bills, and look forward to working with everyone.
And I would just ask you, because what we've seen as a Democrat, we passed this, the Senate's been sitting on it, even as time is ticking. And in Colorado, for instance, we're looking at probably a $2.5 to $3 billion drop in tax revenues this year, see it again next year, and probably the year after that. And so I would just ask you to really push on that one, or there's going to be a lot of people laid off at just the worst time in very essential services. And so, gentlemen, you've done a heck of a job. You get patted on the back now, but we're still in this emergency, and now we got to focus on going forward, which is this next iteration, or there's going to be a lot of trouble come the end of this summer. With that, I yield back.
Thank you very much. I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned. Thank you very much.